What you're about to watch is going to be an interview with Daniel Rondberg, who's an agent with Nations First Financial. Hey, Daniel, how are you?
Yes, Vash, thanks so much for having me on the channel, man. I'm a huge fan. I appreciate you inviting me to come on.
Man, I really appreciate you coming on. I'm really excited to to just have this conversation and for my audience
Thanks.
to hear all the value and knowledge and wisdom that you bring to the table. And so I know I did a quick little introduction about who you are and your agency and your purpose in terms of your ideal client. But maybe if you could tell us a little bit about your background, how did you get into this business, and then we'll take it from there.
Yeah, I was going to school for finance and I got hired by JP Morgan when I was, let's see, 21, 22, right out of college. And I just went to go work for them, got licensed. And then I went to join the family business a little ways into my career. And I've been here with Nations First ever since. I did leave for a period of time and start my own company and then decided to come back. And so, yeah, I've been very blessed to be doing this for about 13 years.
13 years. Awesome. Awesome. Okay. And you're able to help folks out nationwide and your audience or yeah. Now you have your own YouTube channel as well, don't you?
I do, yeah. So I'm like a baby YouTuber compared to all you guys, man. I have a nice little channel that's just slowly building, but hey, I'm so grateful. I love the people that watch my channel, and my subscribers are so great because they're so engaging, and I've gotten to meet so many of them. And that's like the blessing of what I get a chance to do when someone meets you and tells you what they like or what they'd like to see,
Yeah.
gives you some feedback. It's the best. So because of the channel, yeah, now we're serving people. I mean, we used to pretty much only help people in Arizona and the Southwest, but now because of the channel, yeah, we help people all over.
That's awesome. That's amazing. So maybe if you could tell the audience, how are you helping people? What
That's
is,
a great question. So I view my mission as helping people realize their purpose in retirement. And what that really means is if you look at retirement, it's an interesting phase of life where a lot of things change in a day. All the behaviors, all the habits, everything you've been used to your entire life now shifts. And when you go into that transition, a lot of times people don't practice how that's going to feel. So scarcity can creep in, lack can creep in, suffering and anxieties and stress and all these things that people deal with when they retire, very real fears. And there's not a lot of great training on how to help people to make that transition. So our company specializes in doing that. We help people with a process to set up the right tools to optimize their retirement income to help keep them in the abundance mindset so they can show up powerfully. And that's how they arrive at their purpose. Because again, you can't give, when your cup is empty, right? And so, we need people to be in the best place, the best frame of mind, feeling abundant. It's easy to feel abundant when money's flowing, right? Like when we're in this accumulation phase of life, we're making money. It's easy to go out to dinner once in a while and have some
yeah.
fun and think and don't really budget and it's okay. And I'm still building wealth and whatever. But when the paycheck stops, that's when the challenges set in. And so if you don't have a process for how to handle that and give yourself permission to fully enjoy, you're going to have a suboptimal retirement.
Awesome. Okay. Very important. So one of the things that I heard you say that, I think is important to distinguish that there's a difference between the process and the tools, right? Because you said,
Oh yeah.
right. So how much weight or how important is both sides, the process as well as the tool?
Man, that's a great question. They're both important. You know, I think it'd be like asking, again, let's just use this as an example because I think it's an important job, but let's use like a pilot, right? They have a process and they have probably an incredible vehicle, like a plane or a helicopter or something, right? They're both important for the flight. So, I think they got to each be treated with their own level of importance for what they do to contribute to the success of the journey. Right. And the
Right.
same is true with retire. So I think it'd be great if we could share our process. And I know that you help a lot of entrepreneurs. And I think what's interesting about our process and why it lends so well to the entrepreneur community is if you look at what the definition of being an entrepreneur is, it's really the ultimate financial risk, right? It's like taking on more financial risk than anybody. And you do that so that you can create value and better the world and make a living and make an impact, right? And so when you do that, You don't really, a lot of times we're meeting with our bigger entrepreneur clients or even just our startups. They're taking on so much risk with every area of their life that when they are able to set aside some money for a rainy day, they don't generally want to take risk with that. And I think if you look at what a company's responsibility is to their founder, you're going to find some other liabilities that are being funded that you could actually easily recoup using some of these tools. So let's talk about the process and then let's talk about some of the tools, if that's okay.
Okay, go for
So the process isn't mine. I didn't create it. It's Tom Yegna's. He created it however many years ago. I don't know when he came up with it. It was quite a while ago now, but it's just simple and it works. So there's two steps. Number one is we look to make sure our clients have enough guaranteed lifetime income. That's very important because we don't know how long anyone's going to live. So if you have people living to be into their 100s to become centurions, you're going to need income for a long time to cover all those people. So that's a really challenging prospect, right? And so the other reason why guaranteed lifetime income is so important is because of what I mentioned earlier. If you don't have consistent, steady cash flow that you can count on, that you know is going to be there and never going to run out, it's very hard to feel abundant and excited about the idea of giving or spending money. Every conversation becomes this tug of war between scarcity and abundance. So cash flow is the solution to that. So if we look at what are cash flow tools, well, there's Social Security. And again, it depends on what age you are, right? Because some people are saying, well, I'm not planning on that for my retirement. Like if you're a millennial, but if you're, I'd say 50 years old and up right now, we're using it as part of all of our income, scenarios. So I would say if you're 50 and up, you're fine. I'd say even if you're younger, you're probably fine. But for most people that are concerned, I would say, Social Security is going to be there if you're in that range. And I think it's still going to be there if you're younger, to be honest, just with the way it's set up. But then you have a pension, which again, if you look at people in their pension, everybody loves their pension, right? If you're talking to me with pension, like, oh, thank God, I was the last one to get the pension, like they love the pension. And the last one is an annuity, because an annuity is the only other vehicle that can create that lifetime income guarantee. And the reason why I've been grateful to be on so many wonderful people on host channels recently is because interest rates are so high. And when interest rates shoot up, it is like the golden time for annuities. It's like they become so much better overnight in terms of, and when I say better, I don't mean better products. I just mean higher payouts, paying more interest. And you can get a lot more for your money. So when you look at an entrepreneur, right, who's looking to make their dollar work as hard for them as they are for it, I think there's some value, a tremendous amount of value in storing capital in the right type of overfunded whole life policy. And we could talk about why business owners could use that. But at the same time, when we talk about the responsibility of the founder, you look at like a business like ours, a family business, I have a liability, a responsibility to my parents to make sure dad has a pension, right? So we can ensure that with the right kind of tools. So again, when you look at the process, we're looking at how to make sure you have enough guaranteed lifetime income. And again, the final reason why that's the most important step is because if you don't have that, you don't have anything. But if you also look at the history of America and retirees, people used to work for a corporation for 30 years. They'd get a pension, they'd retire, and them and their spouse would have enough income for the rest of their lives. There was no retirement planning. There was no seminars. There was no webinars. There was no YouTube. There was no need for it. Then they switch over to the 401k when they realized it was much cheaper to match contributions for people that contributed in the late 80s, early 90s. You fast forward 40 years from there to today, and now we have this thing called a retirement crisis, a baby boomer dilemma. We have people running out of money. We have people that are needing to get this content and information out now because people don't know what to do. Because what you did was, not you, Sebastian, but what we did was we took the responsibility of saving for retirement and put it in the hands of people with no training on how much to contribute, what to invest in, when to rebalance, and how much they can pay out. And then you wonder why people are running out of money and it's so difficult. Well, there's no process put in place. So lifetime income is the most important. It worked before we broke it. And we're going to start with that. Step two is, if you have enough income today, have you removed the other key risks that could mess up that income? So a good example, that would be what we're seeing today with inflation, right? If you have a fixed income to meet all your need for expenses, but then you have costs go up, well, your purchasing power is diminished and you need more income, right?
Right.
Same thing if taxes go up, right? If taxes go up, that's a risk. If you need long-term care in your retirement, that's a risk. If one of your spouses passed away, or if your spouse passed away before you, that's the economic impact of losing your spouse. That's a risk.
Mhm.
So, too much volatility, interest rate risk, timing risk. there's a series of these key risks. If we run through those key risks and we remove them, risk is just the probability that something can go wrong.
Right.
And Murphy's Law is telling us anything. If it can go wrong, it's probably going to go wrong. So let's just remove it. And with Tom's process, the probability of portfolio failure is zero. Now, once you have enough guaranteed lifetime income and you successfully remove the other key risks, which again, you can do for pennies on the dollar with the right tools that remove risk, which is going to be life insurance and annuities, then that's a great time for our clients to be taking calculated risk and building wealth in retirement. That's a great time for additional businesses, real estate, other things that appreciate in value. But if you can set your bases up first, you're going to be, so much better off. And when you look at an entrepreneur who's putting it all on the line, it'd be nice to know that they're going to have a pension at the end.
Awesome. So I don't know if you know this, but I'm actually taking notes down, and I hope anyone who's watching this video is taking notes as well, right? Because I always want to learn and absorb new knowledge and information, different angles and perspectives. So just spitting it back to you, the process is the guaranteed lifetime income, number one, and number two is basically removing risk, right? Removing risk. And that boils down to number one, guaranteed lifetime income is securing cash flow. For seniors now, they're looking at Social Security, pensions, and annuities. And then for someone more in the growth area of their life or stage of their life, it would be a combination of life insurance and annuities. Is more or less the strategy or the tools.
Well, those are tools, right? Yeah.
The
So
tools. Those are the tools.
yeah, let's back up on that, right? Between process and tools, right? So we outline the process. What are some of the tools? Right. Because you hear it all the time, Sebastian. It's like, they're like, oh, well, we had a 401k and then 2008 happened and then we had to go back to work.
Yeah.
Or you meet with somebody and you're sitting down with them and they have most of their wealth concentrated in their 401k. And you say, okay, well, what would have happened if the market were to go down by 30% right now? What would, oh, well, that would ruin my retirement. I have to work another 10 years. Oh, okay. Well, should we make sure that doesn't happen?
Of course.
Yeah. When should we do that? Probably like that's the next thing we should do. Right. So there's a process to this, right? It breaks my heart. And this is why I'm trying to be so proactive. And this is why I've broken my silence. Like for years in this industry, I was a ghost, right? Like I didn't do YouTube. I didn't do podcasts. I was just behind the scenes, just head down working. But I had to get out there and start sharing this stuff proactively because I'm just tired of hearing that. Like there's no reason that should ever happen. Why would it? If they're getting the proper guidance and they're able to properly communicate what they need for their advisor to map their retirement to meet their standards and their needs and priorities, then that would never happen because there's tools like index annuities that would prevent that from happening. So why would you have to cost someone? You only get one life. So either somebody wasn't paying attention or somebody didn't know better, or the unthinkable, somebody just didn't care. But that stuff happens all the time. And
Sure.
it doesn't need, it's so simple to solve. It just drives me crazy. So let's talk about a couple of scenarios for business owners. Okay. Let's talk about some specific tools.
Yeah, that sounds good.
When you're running the business, depending on what phase you're in, at some point, cash is going to be very, very important. And you're going to want to allocate that cash to the business as much as possible. One of the best lessons I learned early in my career when I worked for JP Morgan, I went to go visit a very wealthy business owner in our town, and I went to his office. And my goal at the time, being a novice little banker who didn't know any better, was to try to sell him a CD. I had these great rates, and I was going to talk to him about, he's got some of this money in this account. Why don't we move it into this CD? It'll be a better rate. And, I'll be like a new banker who's setting up a CD. You get a little, I think they paid you $10 or something. I don't know. It was but the point was that's what you do as a banker, right? You're trying to, collect assets for the bank. That's what your job is.
Yeah.
You're supposed to take care of the customers, but a big part of it is getting assets for the bank. So I go to his house and he goes, Daniel, why would I put money in a CD at 5% when I could put $1 in my business and double it? If you're looking out for my best interests and you're here to advise me as my banker, why would you ever tell me to do that? There's a great question. There's not really
That's
a
a
good answer. So the point is,
great
the
question.
answer is yeah, you should do that. However, life is going to happen. And is it cheaper to insure long-term care with your dollars or the insurance company's dollars? Right. So there's ways to create leverage. Business owners love leverage. They love dollars going multiple directions at once
Yep.
for them. That's why life insurance is so popular amongst the entrepreneur community, because you can have $1 do the job of like 14, in one thing, with cash value life insurance. But the same is true with annuities, right? Like if you, in a sense, I want to be careful saying that. What I mean by that is, let's say, for example, you look at the business like ours, right? Where dad's going to retire, we're going to buy him out in about a year. How is dad going to get a paycheck? Well, it's going to come from here, right? Well, what if we just purchase a lifetime income annuity that guaranteed dad's paycheck? Then that takes pressure off of the business. That takes dollars off of the business. That takes need for capital off the business. And that allows me to keep capital allocated where it's best served, which is the business. So again, a lifetime income annuity can be a great tool. A properly funded life insurance policy can also provide similar benefits in some ways for business owners, right? You look at like, Jim Harbaugh's plan or some of these really sophisticated split dollar concepts with CEOs. A lot of these major corporations and banks have these with their CEOs, right? They compensate them in life insurance.
Mhm.
It's much cheaper for them.
Yep.
They all get a big tax break. And then what happens? They recoup all the compensation back when the executive dies to the corporation. So it's essential for entrepreneurs to know about these tools because they want to be taking advantage of everything that's possible. They want to be leveraging as much as they can, and they want their capital in the right places. You have to bring in risk transfer tools to do that. Otherwise, again, you're suboptimal as a business, right? Why would you? It'd be like if you were an entrepreneur and you're like, hey, for every $2 you spend on whatever, you make $4. But you're sitting over here saving money in a savings account in case your building burns down. No, that's dumb. Just buy the fire insurance and then put that money back into your business and make 10 more things that make you $4, right?
Right.
So that's why insurance is so paramount. It just goes so hand in hand with entrepreneurs because of the level of risk they're taking and because they have the ability to multiply their wealth. I was talking to somebody about this. I was talking to a business owner this morning about this on my way to the office. He was like, Daniel, when would you ever use life insurance? I'm like, it's simple. If you have a way of multiplying your wealth, I would buy cash value life insurance before. If you don't, probably wouldn't. It's not that great of a growth vehicle on its own. so, so you just need simple frameworks to help people. So I don't know. I hope that's helpful to the question in terms of the tools, but
It
that
is
like a
helpful.
life annuity is a tool that gets overlooked for entrepreneurs all the time, but it's got massive value.
So I want to kind of go back to some very basic fundamental questions.
Okay.
Let's assume someone who's just not even familiar with any of these topics or this language that we're using, right? I went with the status quo. So I guess one of the large groups of people that I talk to on a regular basis are middle-aged retirees that are like 45, 50 years old. They're retiring from corporate America. They've saved up maybe, 400,000 to $1 million in a 401k. Okay.
Yeah.
And they're looking to buy a franchise, right? So I actually get referrals from some of the franchise brokers and business brokers that sell businesses. They're either looking to
Wow.
start a franchise, buy into a franchise, or they're looking to buy an existing business. And one of the ways that they can fund that business or they can supplement the funding, there's something, I'm not sure if you're familiar with this, but it's called a self-directed 401k rollover program, which
Mhm.
it's the acronym is ROBS. It's rollover business funding, basically. And so what with this ROBS program with the 401k rollover, what they can do is they can take that 401k, roll it over into a new one. The company has to be structured as a C corp, and they're basically able to purchase all of their shares of their own company through their 401k. So that 400,000, that $1 million lands in their business's bank account with no tax repercussions, no penalties, no fees at all. Yeah. And now they have all that money available to the business. And I help people set this up all the time. Right. So now they have the money in the business and they're going to start using that towards the business. Right. That's one way
So,
that.
so they got to be a C corp, and then
Uh-huh.
you're saying you can take an old 401k, roll it through the ROBS into a new 401k, and then actually let them buy the shares of the business to the 401k, and then give them access to that capital in their business tax free.
It's a great program. And,
Like,
I do a lot of SBA
yeah,
loans.
for the contribution, and then you could actually use the capital tax free in your business.
Correct. Right. So what I'm trying to talk to business owners about is that, okay, we can use that now, to purchase key person insurance, high cash value, whole life insurance, which you can then, you know, funnel your money through to repurpose, recapitalize on your business expenses, business debts, and on your business investments and future growth.
That
What
is
do you think about
crazy. That is absolutely crazy. You're the one that talked about the Robs, by the way. I don't know if you remember when the first time we met, it was at Denzel's event.
Yeah.
And I was like, it's my first time speaking at an event like that. And I was like super nervous. And then the first person I bumped into was you. And you were like, hey, what's up, man? And I was like, hey, what's up, Sebastian? Like, that was crazy just getting to run into each other there. But man, I think that's an awesome idea. I think that's where you told me about that originally. I think that's a really cool idea. I've never seen it happen, but
Yeah.
I'm sure I always look at like, is there a case law that's already happened ahead of it? Is it proven? Is it okay by the courts? And if there's like well documented cases,
It is.
and like
Yeah. So I do a lot of SBA loans.
sure, yeah,
Yeah.
yeah, I knew for it.
And SBA is a branch of the government. And so those
Right.
loans, the banks and the government are okay with the ROPS program as a way
Yeah.
to get access to liquidity, because typically they'll need 10% as a deposit into the loan and then another 10% cash reserve. So on the $2 million loan, they're having to come up with almost 400,000, to be able to do that loan. So if they can do that using the ROBS, it doesn't add debt or risk to the loan. So the bank is okay with that. And then of course the bank has to submit that package, the SBA, to the government to be verified and see that, it's approved. So this is definitely, a legitimate, solid way of leveraging into your business. But
That is so cool. That's got so much value. So does the money that the SBA wants to look at as a down payment, is it okay to sit in cash value life insurance, like almost like as escrow for the
no,
like, oh,
no,
okay.
no, yeah, no. So once the transaction's done, right, then um, then yes, you can, whatever available cash is in the business, then you can use that towards the policy, right? Um, but if I was doing an SBA loan, I would have a conversation with the bank about that, just putting it in the policy first and then taking it
Yeah.
from the policy, just to make sure the bank was okay with that, because every bank's going to be a little bit, more strict, or typically they want to know that whatever debt you have that has interest attached to it
Mhm.
will be able to be serviced outside of the business, meaning your own personal income or other business income or revenue from any other affiliate businesses you have can service
Mm.
that debt. It's not going to add a burden to the new business that you're acquiring or that you're starting in that franchise. Um,
Wow.
yeah, so that's the, one of the things that I help business owners navigate in terms of, figure out what's legitimate liquidity that I can use, right? To the point where even if it's coming from family and friends, it has to be documented as a gift, or
Yeah.
you have to prove that you can service that debt outside of the need, if it's going to add stress to the business revenue and income. Yeah,
That
so
is a
that's a great way
really
to do
cool.
that. Yeah, and of
That's
course,
a good program, man. That's huge.
yes, I agree with you 100%. It's an
Yeah.
amazing program, and a lot of folks are using it just to start their business and pay for the whole business, or as a bridge, to but what they don't know is how to then take it to the next level, which is what I'm trying to teach,
Mm.
to the folks that I'm speaking to and to the business community, is that don't just do the 401k rollover into the business, but now that you have that money in the business, you can now leverage that to purchase key person, whole high cash value, whole life, and set up, basically pensions through annuities, right? Um,
Right.
and so I guess, I wanted to ask you, what are some
Yeah.
other ways, right? If you're speaking to someone, business
Mhm.
owner or not, that, if they have that large amount of money sitting in a qualified retirement plan, what are some of the other ways that you can help them to move that money into a better tool, right? That's going
Mhm.
to help them meet their goals and retire without any concern or worry about running out of cash flow.
Yeah, I think there's other great tools in conjunction with lifetime income annuity they could use. The index annuity is a great tool they could use. Those are really exciting right now. I've been very excited about a couple companies in particular that have these, what they call, like these guaranteed rate terms. So the big problem with indexing has always been, well, what happens when you start out well, but then they start to lower those caps, those participation rates, those renewals, right? But with index annuities, the same is true, right? So they'll lower your caps and participation rates over time. So where you used to be able to get 5%, maybe in a couple of years you could only get as much as 3%, right? Well, there's a lot of companies coming out now with these like, hey, if it's a 7-year annuity, then it's going to be guaranteed to stay at that rate for all 7 years. And there's some that are incredible right now, Sebastian. Like they have these performance triggers of like 8.5%, 9%. It's just insane. So that means that they're based on the S&P 500, not like weird indices that people make up, like real indexes. The S&P 500 intraday index is tracks the S&P 500. They tracks like 94% of it. And when it hits, basically, if it does anything but go down, it'll credit this 8.5%. And you can get that locked in for, 10 years. So that's really cool. I think that's a great tool that is available. These index annuities are, because these trades are so good,
But now,
they're the best.
I guess the question I'm kind of posing is, if I have my money in a 401k, how do I
Yeah,
get it to an index annuity?
yeah, it's a great
Is there a
question
tax
because a lot of
consequence
people have,
in doing that, or what happens?
yeah, but a lot of people haven't seen these tools before because they're not inside 401ks. Haven't been until recently with the new law, and they can be. But basically, depending on your plan's guidelines, we would just call the 401k provider, see what the plan documents state. If they let you do it over the phone, it could be as simple as just they'll overnight a check as a rollover
Mhm.
to a new custodian. You don't touch the money. It just goes like direct transfer from like one 401k to the IRA, and you can purchase an index annuity, or you can, like you said, you could put it in a lot of different things, real estate, whatever you want.
Okay.
But that's how you would do it, just a rollover. Sometimes they require paperwork. Sometimes there's a phone call, but there's so many cool strategies because the interest rates are so good right now.
Yeah.
We've done a lot of like combining products. So like doing joint lifetime income annuities with survivorship life. It's crazy because, if you think about it, Sebastian, what does everybody really want? That's a retirement saver, generally speaking. you know, they want their money to be safe. They want their money to be liquid, and they want to get a good interest rate that they can take the interest off the top and never touch the principal, right? That's like the
Right.
dream scenario for most people.
Yeah.
Well, that's been hard to find for the last 10 years. Now you can go to a bank and get a 5% rate, but for the last decade, you couldn't, right? So what do those people do? Well, right now, when you look at lifetime income annuities, you can get joint payouts right now, depending on how long you defer from your initial principal, of as much as 8, 9, 10, 12%. What does that mean? That means if you have 100 grand in your 401k, you roll it over to a joint lifetime income annuity for you and your spouse, let it sit there for 10 years, compared to the original principal. Okay. You're probably going to get about somewhere in the neighborhood of 10 to 15%. So that's 15 grand, right? So if you put in 100, you know that you and your spouse are going to get 15 grand for the rest of both your lives. As long as you live, no matter what happens, doesn't matter. You're going to get that money. Even when you run out, it's still guaranteed to come from
So
it.
question I have there is, at what is there like an age where, starting that annuity in that example would be ideal? Does that still make sense for someone who's 35 years old or someone who's 60 years old? Like, when do you start your
Yeah,
annuity?
that's a great question. Let's finish the example and it'll make sense in the answer. So for a 35-year-old, no, probably doesn't make sense because again, annuities are based on your age. So the older you are, the more they pay out. The younger
Right.
you are, the less they pay out. Right. So it's one of the advantages for seniors is if you're in your 80s, you're going to get a much better payout than if you're in your 70s because you're closer to your mortality. So they got to pay out as much as they can, as fast as they possibly can. If you're in your 90s right now, you can see payouts as high as 20%, right? Because they're trying to get that money paid out as fast as they can. And you're hoping that you have the benefit of being around to receive all those payments in the future. So, going back to why it's so important to put these two products together, if you have an annuity where you know you could defer for a period of years, and let's say you don't go as long as 10, let's say you go 5 years. And if you go 5 years, the original payout is 10%. So it's 10,000. Okay. Well, here's what's interesting, Sebastian. Let's say that you didn't have 100,000 to work with. Let's say you had 200,000 to work with. Okay. And with that other 200, that other 100,000, you bought a 10 pay survivorship joint GUL, guaranteed universal life. Put the premium in, you're guaranteed to get the death benefit. There's no indexing, there's no performance, there's no cash value. It's literally like pay the premium, get the death benefit, guaranteed to a certain age, usually like 105 or 120 or something. Okay. So let's say you have 200 grand, you put 100 into the survivorship life, and that survivorship life, let's say, produces 200 grand death benefit. So now you have 200 grand tax free just replaced. So you have 200,000 taxable, replaced it with 200,000 tax free. Okay. Took the other 100 grand, rolled into a joint lifetime income annuity and deferred it for 10 years. Now you have 15% payout. Or if you look at 200,000, you have a 7.5% payout. So if you go back to our original example, what everybody's looking for, they want the highest interest rate they can. They want to make sure all the principal's left over for their family. Look at that scenario of joint life and joint annuity. It's not the same as a bank product, right? For many reasons. But if you look at the function of what it does, okay, you can get a 7.5% income for the rest of your lives. And all that money is going to be replaced tax-free to your family when you're gone, as if you never touched the principal. It's got a compelling case,
Yeah.
for a lot of people. And
That
so what's fun is then you get to play with it, right? Because if you know anything about life insurance, you know that my example is completely wrong.
Mm.
The couple's age, if you did a 10 pay of 10,000 at GO, you get way more than 2,000.
Yeah.
So what it mean? Well, that means more money can go to the annuity. Well, what does that mean? That means the income's higher. What is the net result of that? A higher rate of return. Because the more that income is in relation to what you initially put in total premium for the life insurance and annuity, I'm looking at that as it's not a rate of return, it's an income. But if you look at it in the sense that your death benefit's replacing all the principal,
Mhm.
so that's money that it makes off the top, it's not a rate of return, but it serves a function that could be assessed as similar.
Interesting.
So
So is there a strategy where again using that 35-year-old for example, who's starting maybe with a whole life banking system strategy to accumulate and grow cash flow and then cash value? I'm assuming I don't know anything about like is that a good
yeah,
idea at that point or should I just only surrender premium that did not grow so I don't have a taxable event on that portion? And what if I do that? When should I do that? Again, starting at 35.
great questions. Okay, so wow, that's amazing. Let's just take this 35-year-old for example. So yeah, annuities. I'm not using annuities for 35-year-olds, generally speaking. Now,
Right.
again, there are these newer annuities that have come out with these rate lock features, have made a compelling argument for some younger people in specific scenarios. So that's kind of an outlier, like a one-off kind of scenario. Generally speaking, yeah, I'm going to be doing what I'd be doing, which is, hey, I want to look at for activities that are going to multiply my wealth, real estate and business. I'm going to save my money in whole life insurance because it's safe. I can access it over and over again tax free. And the whole secret to it is you want to get it compounding as early as you possibly can because that's where the magic is on the back end. So I want to get it started if I'm 35, which 34. So I got mine cooking, but yeah, they're maxed on right now in real estate. And yeah, I'm building a portfolio, but also my little bank too. And that little bank will become a big bank. And so you want to get those dividends started early. Now, when you get into retirement, it depends on who you are as an investor or person,
So let's say
right? For me,
I want to kind of pull back and
yeah.
stop
So you
at
want to
around
go back, right?
65.
Yeah, you're not like super entrepreneurial at that stage in the sense that you're trying to grow and do all these different things yourself. You're trying to kind of enjoy the ride at that point,
Right.
be a little bit more hands off and have yourself set up more passively.
Yes.
That would be a time where, yes, you could consider a 1035 exchange to an annuity. And what will happen is the company will just basically transfer your basis over and you'll essentially have no tax, just like with the rollover at the time. And it'll still grow tax deferred. And then once it starts paying out, you're going to pay the tax first.
So I wouldn't have
Obviously,
to surrender it. I could just 1035 exchange it.
yeah, you definitely, I mean, yeah, I wouldn't, depending on your situation, I don't know if surrendering makes sense. Maybe you want to incur tax liability if there is some, I don't know. But the 1035 is really going to be crucial to the annuity because, yeah, then you can just kick that down the road and manage that through the income payments as opposed to realizing a big lump sum tax all at once. So a 1035 could be appropriate if you're the type of person who says, look, I don't want to manage this policy anymore. I'm not using it to loan out for hard money anymore. I just want the highest guaranteed income stream I can go get for me and my family. And I don't want to think about this again. Boom, you can go lock in a lifetime income annuity and you're going to get a pension base. It's protection. Now, where you would MEC, that has a bunch of different places. I'm typically seeing a lot more 1035s to mix into annuities when policies are not set up properly. So these are going to be like rescue designs. So we run into people all the time that are in bad shape with either an IUL that either wasn't funded properly or was funded properly, whatever, it just is not going great. Or they have some old product that wasn't, they've been minimum funding for years, some old UL or I don't know, there's a million stories. But that's where we're seeing a lot of those 1035s to rescue that cash value out and then reposition it for those goals. In fact, we're seeing a ton of those hybrids. Hybrids have a great way of helping that scenario.
Mm-hmm.
Those would be like hybrid life, hybrid annuity. But where you would MEC would really be for somebody who says, hey, I'm 80 years old, 75 years old, and I have, 300,000 in the bank. And I really like this 300,000 to go to my heirs. I'm putting it in CDs at 4%. It's the best thing. It's like, well, maybe, but maybe we could take 150 of that in MEC and get 300,000 right there. And then you could put an extra 150 in CDs. Like, wouldn't that be better? So it's like, so I mean, these kinds of things are like ways you can remove risks for seniors with that are being intentionally allocated to assisting their primary needs. That's where MEC can really serve a great function.
Amazing. Awesome, man. Well, I know we could probably, keep going for hours, but I think we've covered about 45 minutes here so far.
You're awesome, man. I'm so
Yeah.
grateful to you. Yeah, man. And we just like barely even scratching the surface. Like there's so much we could get into. We should
I
just
know. Yeah, so we'll definitely do this again. We'll have another
okay.
a part two. And
Cool.
and anything you want to, I guess, leave the audience, any words of wisdom, anything, if you had an opportunity, you're speaking to people and you just want to
Yeah.
share, I give you that open floor.
Yeah. Thanks, man. I appreciate that opportunity. You have a great audience. I love interacting with everybody in your community and I'm honored to be here. And I would say my parting words of wisdom would be just seek clarity, figure out what your vision is for your life, start mapping your actions towards that and just simplify things. Like these things aren't complex. They're only complex if you make them complex and they don't need to be. So every decision you're making when you're looking online and watching all these different YouTubers on, should I be buying life insurance or should I be doing this or all these different strategies you can pull in different directions. If your core values are in alignment with the direction you want to be going, then it's a lot easier to evaluate these decisions as they come up. And even as they do come up, our goal is to create frameworks for you so that you have metrics to evaluate if they're appropriate for you or if they're in line with your long-term vision. So, that's what we're hoping to do with these videos is say, okay, hey, I'm being shown this life insurance policy, but does it make sense for me? And that's what we want to be able to help create. And that's this community that we're part of. And so I'm grateful to Sebastian for helping to get this message out. So thanks so much for watching.
Daniel Rondberg, ladies and gentlemen. Danny, thank you so much.
Yeah, man, thanks, Howard. It was really fun. Let's do it again.
Hey, everyone, thank you for participating and listening. I hope you got great value from this video and this time that we spent with Danny. Please make sure you like, subscribe, and share. Let YouTube know about the value of this content so more people can hear this, learn about it, and make better financial decisions in how they manage their money.